Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Like the man said, this is Bill Bullington here every Saturday morning from 11 to noon. If you'd like to call in today, the number is 330-664-0700. Actually, that's my office number if you'd like to call to talk to me there. So just leave a message. Actually, and I'll try to get back to you. And I'll bring that up again during the show because I know a lot of people are out there driving, and I hate to see them try to leave a message on a on a cell phone while they're driving. But anyway, just kind of looking around and just taking all the political stuff that's been going up. It's unbelievable. The political headlines are definitely outnumbering the financial headlines. Not a whole lot of. It's not really all that exciting in the stock market, quite frankly. Stuff is well, I guess it's been a few months where we are right now within a fraction of a percent of where the market was at the beginning of November last year. So pretty much dead. And that's to be expected. In fact, the market spends an awful lot of time going sideways and spends a lot of time going down, too, almost as much time as it does going up. And that's why it doesn't really pay that much to try to forecast stock markets. If you're going to forecast, try to forecast over a 5-year period or longer. And that's maybe next weekend I'll take a look and go into that a little more deeper, but a little deeper, and tell you why. And how you come up to conclusions. You can do a lot of this stuff at home now. You can look up a lot of the data that wasn't available back when it was coming up through the system. And not that you want to be spending your time doing that sort of thing, because it is very tedious. It's extremely tedious. And if I just didn't like it, I wouldn't do it. There is no way. But I do. I really enjoy it. So it's more my job is also a hobby, and that's kind of interesting. I think very interesting to look at other people's opinions, especially those that have had good track records. I really like to try to get the opinions of those people. Today, most of what the investment world is really there are several thousand funds. And I always like to say, if you can think of an idea, somebody's probably already doing it. And you can get some information. If you've got a screener like I do, I'm not a super big fan. I haven't found a free one that I like as well as the one that I use. Mine's not that expensive. I don't think it's $50 a month just for the screener, and which is a fraction of what we have to spend on technology. But that's why I'm saying only $50 a month. It lets you set up various scans that you can do, and with all the experience I've had over the years, I just set up my own scans to see what I want to see, how I like to see it. And so I can pretty much keep up. There were 43 stocks, actually, that passed the criteria that showed up on Friday. And that's not like a super strong number. It's not a horrible number. And what I'm saying is, in relation to what you would see on a normal day, that this is pretty normal. 40 to 50 stocks showing up on this particular list. I'll show you the ones that are moving right now. As to whether or not they're going to keep moving into the future, well, when that crystal ball starts working on my desk, I'll let you know. But it's a good place to start. If you want to know which companies are going to go up relatively soon, rather than, hey, I'm going to buy this thing and I'm going to sit on it for years, one of the stocks that came up on the list today is the Monster Beverage Corporation. The symbol is MNST, and it was up 5% on Friday, but it's only up a 10% from the high that it reached back in 2021. So this is what I'm talking about. You're going to be a stock investor, you better have patience, like a lot. And if you want to make money quicker, sooner than later, you're probably better off looking at those stocks that are going up right now. And that's why I kind of talk about that a lot. And it's interesting. Today, so many people have access to this knowledge and are outside to the data. The knowledge part, not so much. I don't come across a lot of younger people who really care that much about it. I see them subscribing to a bunch of websites for tips, and that's what their parents used to do. The people that are my age, back when I was their age, there were, stock newsletters were super popular, and that's where people will get their tips. And some are good, some are not. I think if you read anything about Warren Buffett, and I've read Ben Graham's books, all of them. Ben Graham was Warren Buffett's graduate school teacher, and where he had a big influence on Warren Buffett. Let's see, I think it was Bill Fisher, one of the Fisher guys, that Ken Fisher's father, that also had a big impact on his methodologies for selecting stocks. And I know a lot of people don't. They think he's too old. I'm telling you, that guy's sharp. He's still as sharp as he ever was. But his biggest problem, he's got so much money, it's really hard to manage that. And he's got teams of people doing it. They're doing a good job, but it is not easy. That's one of the things that I guess my entire career, I've just always been amazed at people who don't do this every day that think that it's going to be easy. No, you're out here. This is one of the areas. I would bet big money that if you would go to the dog pound, go to a Cleveland Browns game, go to the dog pound, and sell raffle tickets for people to be able to go up, to dress up in a uniform and go out onto that field for at least one play at any position. I don't care what the position is. Guard, center, tackle, ends, running back, quarterback, defensive back, linebacker, defensive line. Give them one shot to go out there, and maybe you give them 3 plays or an entire series set it down. You could raffle those tickets off like crazy. And when those people get down there and on that field, and I know there's going to be millions of people vying to be able to do that, and they are going to get their butts kicked. Maybe unless they play division or play college football, but the vast majority of the people that go to the games haven't played at that level. But I'm telling you, you could raise a lot of money. That would be a heck of an event to watch the people that paid money to get into a lottery to dress up, go down on the. Actually, you could get a lot of money just for them to dress up and stand on the sideline. They wouldn't have to really go. But anyway, my point is, it looks a lot easier on television than it is to do. You look at various portfolio managers. Sometimes some of them are they're doing all the right things, but the things that they're doing are not in favor now, and so their performance is going to look kind of bad relative to what the stock market's doing or the S&P 500. So you have to look into what they're doing and see what the past history was. Was it highly correlated? Did it move in the same direction at the same time? Was it not very highly correlated? In other words, most of their returns came over a certain time period. You need to go back and research that. Why was that? Does it have something to do with the math that they're using to run that fund? There's a lot of stuff that goes into it. And so many people want it to be so easy, and it can be. I mean, I use a ton of index funds, and I'm going to tell you after the first commercial break, I'll tell you the index funds that I am the fondest of. When people say an index fund in my industry, a lot of them think that you're talking about the S&P 500. Well, that's one index, and there are tons of indexes. And incidentally, there are a ton of indexes that do better than the S&P 500, have done better. And I come back from the commercial break. The second part of this, I'm going to tell you why they've done it. And it's not a secret anymore. For the longest time, it was. And I think for a lot of younger people who don't, when they're brought into my industry, they're taught a lot of rules, tons of rules. But they're not taught how to think. They don't want thinkers. They want, and that I understand. I know it. They want people to follow the firm's direction. Hey, this is what you do when somebody's in this situation. Here's somebody at this age with this type of income, this level of expenses. This is the way that we think you should money. And there's a lot of them are really good. They're good, but I came in this industry before any of that existed. It's unbelievable how much things have changed in my lifetime. I would not have actually. I take that back. I really expected these changes, and I expected that they would happen a lot sooner. And if I hadn't expected that, I would have never left. I would have waited for the industry to catch up to kind of where I got to this level about 5 years ago, the level I thought it would be 20 years ago. It only took it 15 years to show up. But now we've got, I really like the choice of tools that we have. I think you can really get good customization. Not that you actually need it, but you get really good customization if you want it. Portfolios that are going to give you the best chances of being successful. And why? Well, because there's been a ton of research. They've issued a ton of product that's come out. In fact, one of the products that I was surprised that this one, it came out, I don't know, probably 4 or 5 years ago. And I was, let's see here. Yeah, about 5 years ago. And it's an ETF. And they also have individual stock models that you can run if you don't like the ETF wrapper. I like it, by the way. The ETFs have some major advantages. And anyway, the way that they're selecting the stocks from this one just scratches me where I itch. It's very similar to the way that Warren Buffett picked his stocks when he was coming up and building his empire. And so I really like that it's based on cash flow. They use cash flow and the cost of buying the entire business. The cost of capital, if you wanted to. Anything that's similar to that. They're actually looking at how much these businesses are generating in cash relative to the price. So in other words, it's based on something that you can actually measure and not so much emotion. By the way, I only got about 30 seconds here before I have to take a real quick commercial break. I'm just going to tell you this is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you'd like to reach out to me, my website's bullingtoncapital.com. And I am going to take a real quick commercial break, but stay tuned because we will be right back.
So many people trying to fill a void inside, so many questions. Asking how, asking why. I might not have all the answers, but I've tasted and I've seen there's a better path with Jesus. There's no going back for me. I'm gonna live the way he says to live.
Bob France here. Improve the comfort and value of your home with new windows from Empire Window Company. Call 855-76-EMPIRE or log on to empirewindowcompany.com.
We had water seeping up the drain in the basement, and that's always alarming. We had kind of a Band-Aid job done, but we weren't going to go back to them.
And she says, why don't we call Wyatt Works? And I was like, oh, yeah, that's those whistling plumbers.
They are men of a higher caliber. Definitely.
Yeah, we had the pipelining. I was very impressed with that technology. I have peace of mind. I have comfort and assurance now that I never have to worry about the drain.
Everything was top-notch, professional, but friendly and personal.
I was grateful that the liner job was not only cheaper than doing a dig out, but I was really grateful that I didn't have to have all of my concrete tore up and then have a concrete job on top of everything.
I think Wallackadoodle means we did it, it's done, you don't have to worry about it. Amen, hallelujah.
Consider it done at WyattWorks.com.
Wallackadoodle.
Go inside the great outdoors with Joe Koulis and the guys every Sunday morning from 7 to 10 a.m. here on AM 1420. The Answer.
No doubt about it, we're spending more time at home, which is the perfect time to make it more functional and beautiful. Hi, Ed Flash Ferentz here for Artistic Renovations, Northeast Ohio's premier and award-winning remodeler. Artistic did a fantastic job with our kitchen in 2016, and last year, they were back for the master bath. Oh, my word. Do yourself a favor and go to artisticreno.com. Believe me, you'll love their ideas and without question the finished product. For a virtual consultation, call 216-520-0838 or visit artisticreno.com.
You've heard the saying, all good things come to an end. Well, not always. Sometimes they just take a break. That's what's happening with Our Lady of the Wayside's car donation program after 24 years and 96,000 rides donated. Pretty amazing. Here's the story. The car lot's owners sold the property, making it impossible for car donations to be accepted at this time. According to the Wayside CEO, Terry Davis, the next right steps will be determined and communicated soon, so stay tuned. In the meantime, Terry and the entire team at the Wayside thank you for your continued support of the 450 individuals with developmental disabilities in the Wayside's care. And please take note, you can still support them by making a donation at thewayside.org. Thinking about updating your home? Well, Joyce Factory Direct specializes in replacing old, outdated windows. Proudly made right here in Cleveland, Joyce Windows features their exclusive Smart Shield high-performance glass, which means you'll be getting the most energy-efficient windows for your home directly from the factory. Customers just love how much warmer their house is and how easy their new windows operate and clean. Right now, you can save 50% on all installations. Just call to schedule a free consultation with on-the-spot pricing, 440-243-5700, or visit joycefactorydirect.com.
Well, welcome back. This is Bill Bullington. I'm here every Saturday morning from 11 to noon. If you hear anything you'd like more information on, feel free to reach out to me. My phone number is 330-664-0700. That's 330-664-0700. Or you can go to my website. It's bullingtoncapital.com. And all the stuff that we talk about, I can point you in the right direction to, or if you want to talk about your own personal situation, feel free to give us a call, set up an appointment. There's no cost, no obligation. So I think I was talking a little bit about the fixed index annuities. I know a lot of people complain when I talk about these because they think they're for old people. And I'm like, well, I guess I'm in that category now. I don't know. But not just for old people. I mean, if you're within 10 years of retirement, and you want to lock in an income on at least a portion of your money, it's a really good tool, and it does things that other investments can't. For example, they will publish a schedule that you can get based on your age and how much money you put into it, and they will tell you exactly what you can get over the next 10 years. So if you're within 10 years of thinking that I might want to retire in the next 10 years, I think it makes a lot of sense and can be a big help because the payments are relatively large, especially if you compare it to treasury bonds or corporate bonds or CDs. And that's one of the reasons that I started using it. I started thinking, I'm actually getting close to that time period myself. In fact, I can use my own 62. I just turned 62. And so I'm probably going to try to work until until I'm 70. And then I'll see how I feel from there. I have a lot of clients, by the way, who are still working that are a lot older than. They're not working because they need the money. That's for sure. But they're working because they still like having a purpose in life or just having stuff to do. And, of course, everybody's different. If you were working in a really physical, tough job, probably don't feel the same way they do. But you still want to be able to basically reach your goal. Anyway, here's something. If somebody was 62 years old, wanted to work for another 8 years, okay, and they wanted to make sure that at least a portion of their income is going to be fixed. This is something I can count on, kind of like Social Security. Yeah, so 62-year-old waiting to go to 70, $100,000 today's dollars would be $13,308 in guaranteed lifetime income. And that's if they end up finding a miracle pill that allows people to live to 150, they are still supposed to pay that for that entire time period. So you can kind of plan around it. And that's the thing I like about it the most, is that you can plan around it. Okay, I've got this much money coming in there. I don't have to worry about that. And all your fixed expenses covered by your Social Security and stuff like this. And you can take the other money and you can be as aggressive or as conservative as you want to be. So it's up to you. And but I think it helps a lot of times just to have somebody to bounce those ideas off of. I know it does. And why I have clients, it's why my field still exists, and I think will probably exist until forever, because these are issues that computers can't know. They don't know how you feel about it. Yes, I could get, if I wanted to maximize my return, I would take the Russell 1000 and take the top 40 stocks, those stocks that have gone up the most in the past 6 months. I would buy the top 40, and every month I would take a look at that and rebalance. Now, there are ETFs like that are very close to that. In fact, they're so close that we're splitting hairs. But you also have to know that when you do that, there's going to be a lot of fluctuation. The higher the returns, the more likely it is to fluctuate a lot. And you don't want to see the investments coming down 30 or 40% in 8 or 9 months during your retirement. I'm sure you wouldn't want to see that. So that's where the balancing act comes in. How much of a decline do you think it really can handle? Do you want those types of funds, which by the way, what I just described, companies that have profits, whose sales and profits are rising, whose share prices are going up, those are characteristics of the most successful funds as far as long-term appreciation goes. And so we use a ton of those. That's kind of what concerns me a little bit, because I get a lot of people who I'll have conversations with, and they think that they know their their funds because they've studied their track record. They've studied how much it's gone up by. And they don't really know how the stocks are being selected in the fund. And if you don't know that, you should learn that like lickety split, because just managing the money based on what it's done in the past, at some point in time, you're going to run into a wall. That's kind of like driving your car by looking in the rearview mirror. You know, when you're backing up, it's fine. When you go forward, you can see where you've been, but it doesn't give you any idea of where you're headed. If you keep doing that, at some point in time, you will run into a wall or something else. So it's but anyway, getting your strategies down and being understanding that the more productive the strategy is, the higher the return, more often than not, the fluctuation is going to be higher on it. Yeah. Same thing with bonds. I mean, bond is crazy. The amount that bond prices, the price of a bond will move. Like when people are saying, well, just get a bond fund. Yeah, today that's probably one of the better things to do, especially if it's a short-term bond fund. Because the short-term bonds are paying almost as much as the 30-year bonds are. And that's pretty amazing, actually. You get treasuries and CDs, they're paying, that you only need to hold on to for a year or two, that are paying almost as much as the 30 years. So that's a little unusual. I've seen that happen before. And what generally happens is when interest rates do start to go up, the 30-year bond prices are going to come down significantly. It's not a little bit. They're going to drop like a rock. So somebody going out and buying a 30-year bond fund because the current yield on it is over 4.5%, and the shorter term yields are 4%. That 0.5% difference there could cost you 20 to 30% of your principal one day. Okay, so just want to be aware of that. And I just see so many people who aren't, and it's a little spooky. But anyway, so just be careful. And if you hear something that you would like to learn more about, feel free to call me, and we can go through it together. We can set up an appointment. First, we don't charge for phone advice. I may not be able to get back to you as quickly as I would like to. Depends on our phone service, actually. We're in Fairlawn, Ohio, and I would tell you, I don't know how old you are, and I know this is really going to date me big time, but when I was a kid, I mean, I think I was like 9 or 10 years old, and there was this show on television. It was the dumbest show I'd ever seen. It was called Green Acres, and their phone system, you go back and go to YouTube and pull it up. Well, our phone system out in Fairlawn is like the phone systems were on that television show 40 years ago. But it improved a little bit, not much. It's so frustrating. I have to bring my cell phone with me into the office every day in case the phone system goes out again. And the buildings are huge. They're very nice. There are a lot of larger businesses in there, and I just don't get it. But and it's been we've probably been in 3 different buildings within a mile of where we are, and I think this one though it's been a little bit more difficult than the others. But anyway, that has nothing to do. So long story short, email us. And I would probably leave a voice message if you want to get a hold of us quickly. Just safer that way. Again, the number is 330-715-0605. The office number itself is 330-664-0700. I just gave out my cell phone number there. But and I don't mind if you use that. But so looking at new issued CDs. And right months, 4.3 for a year, 2 years, 4.35, 10 years, 4.6. I'm not sure that's, well, you can't really forecast that far in advance. I mean, everybody will tell you, a lot of people will tell you they can't. Can't. 10 years from now, I'm pretty sure it's going to be different than what it is today. During that time period, it's probably going to be pretty different. You look at the normalized rate or the average range of what a 10-year CD or Treasury note, before they had CDs, they had Treasuries, what those would be, it's right around the average. It's fairly close to its super long-term average. So nothing exciting, really, to talk about there. And when you're talking about getting income, so you put the money in the bond for 10 years from now at 4.2, and it grows at 4%. Without compounding 10 years from now, that'd be 40. With compounding, you're probably looking at 55, somewhere in that 55% increase. So if you had $100,000 in there, at the current interest rate, it's probably going to be 155. That's not counting taxes, by the way. So the that relative to, let's see, 100,000, 150, you're still 4% of it, about $6,000 a year, 7 years from now. So 7 years from 100,000 at current rates, and they're going to change. I don't know which direction they're going over that length of time, neither does anybody else. But here's what I'm saying. If I did that in the annuity instead of Treasury bonds or CDs, I'm getting a guaranteed lifetime income of $13,308. Now, that's not like an interest rate, by the way. That's an income. Convert an annuity to an income stream. You have to read it. They all have catches. There are different things that you do. This one would guarantee that person for as long as they live, even if their money ran out, if they lived long enough to spend everything they had in their account, they would continue to pay that. So that they pay a little bit more than other fixed investments do at this point in time. That can change. And the payment guaranteed for your lifetime by the insurance company that's underwriting the product. So you want to make sure you're trying to pick a pretty decent insurance company. If you've never heard of the company, if it's a really small company, I'm not so sure I would want to do something like that. But this is America, and a lot of these companies started out as small companies nationwide at some point in time over 100 years ago. Was a small insurance company, and just kept growing. So anyway, that's a really good, I think it's a great idea for a portion of your money, especially if you have something that you like just to have a steady stream of income coming in just to help you pay, keep up. And having said that, why did I pull this up? There's a One Connect financial company, technology company. It's a stock that came up on a screen that I was running, and that screen that I talk about, it's only $5.32, but it had an interesting looking chart. What does that mean? Well, after you've been looking at a lot of charts for a lot of years, you're going to start to notice some patterns there that end up coming up. I normally look at daily and weekly. I do not trade intraday. First of all, that was hard when it was easy. Secondly, today you are competing against supercomputers who are literally tied into the exchanges on the floors. I just don't think it's a good idea at all. It hasn't been a good idea for years now. But every once in a while, you see something coming up on a screen. You look at it, it looks interesting. And I just like to have some money in an account like that. And most of the ones I've held on to, I bought them and just held them because they're of the fundamentals, sales and earnings growth were very, very good. And but if I were to try to trade, and I have to come back to this a little bit, it's not what you think. It's actually kind of boring, and you're holding on to them sometimes for a very long time. So, but we'll talk about that when we come back. These commercial messages. This is Bill Bullington. I'm right here on 1420. Stay tuned because I'll be right back.
Who can bend my burdens and make them beautiful? Who can bring the healing to the hurt I hold? Who else could part the waters when I'm needed away?
Hey friends, Bob France here. The winters of Northeast Ohio are always cold. How about warming up with a nice meal at Harry Buffalo on Great Northern Boulevard in North Olmsted? The all-new lunch special, that'll warm you up, and you're going to like the price too. The brand new lunch special, Monday through Friday from 11 a.m. to 2 p.m., 2 choices of soups, salads, and sandwiches, all just for $10. Now that's the lunch special, but don't sleep on the always popular happy hour special as well. Weekdays from 4 to 7 with new food specials every single day of the week. Wing Day, Burger Bonanza Day, Pizza Day, Kids Eat Free Day. It's a great time. Also great drink specials, $3 for craft pints, domestic talls, well drinks, and house wines during happy hour. And all day, every day, $3 on domestic pints. And always remember to hit the website at harrybuffalo.com to join the herd, get a free appetizer on your next visit, and keep up to date on all new Buff specials. So whether it's lunchtime or happy hour time, dinner time, it's a great time when it's Harry Buffalo time. It's on Great Northern Boulevard in North Olmsted.
Do you ever find yourself saying, I need a vacation? Vacation Fixation can help. At Vacation Fixation, we specialize in all-inclusive trips and cruises to Mexico, the Caribbean, and Disney vacations. Why choose us? Our clients book through Vacation Fixation because they are frustrated with online trip brokers and timeshare scams. Whether it's a weekend getaway, a family trip, spring break, or honeymoon, Vacation Fixation will personalize a trip just for you. Want to know the hottest destinations in Cancun, Punta Cana, Jamaica, or Puerto Vallarta? Interested in room upgrades, beach reviews, or details about resort restaurants? How about finding a trip with a direct flight? At Vacation Fixation, we take all of your specific travel requests and shop our suppliers to find the best deal. What's the cost? Our suppliers pay us so you don't have to. Call 330-573-8147 for more details. Or you can visit our website at vacationfixation.com or check out the deal of the day on Facebook. Vacation Fixation.
Is it finally time to update your bathroom? Bath Planet, a division of Joyce Factory Direct, specializes in replacing and converting old showers and tubs into new, beautiful bathrooms in as little as one day. We have transformed thousands of bathrooms just like yours into a spa-like oasis that has homeowners excited to use their new bathtub or shower. Right now, all bath installations are 50% off. So call to schedule a free consultation with on-the-spot pricing. 440-243-5700 or visit JoyceFactoryDirect.com.
Hello, welcome back. Looking over a lot of the bond rates. Holy cow. Yeah, they've really not as attractive as they were a couple of years ago. Be expected. The only thing constant in the world is change anymore. And so it's one of the reasons I have people, an awful lot of people, like to say, hey, you used to talk almost only about stocks. And so, but now all you're talking about is annuities. Well, at the time, interest rates were so low that people have the bond market, the interest rate market that affects the bond market and CD market. There's way more money in bonds and CDs and treasuries than there is in the stock market. Not even close. So that being where most people have a lot of their interest, and where I'm going to do an awful lot of my business, because that's what the public wants. And everybody's different. People have some money in stocks, some money in bonds, but it had gotten to a point where interest rates had gotten so low that was consuming all their attention. And so I was following their requests to talk more and more about that. And it is pretty fascinating when you think about it. When you look at exams you have to take to be a financial advisor, the more than half the material is on bonds. And I always thought that was kind of funny when I was doing the industry. Now I know why. But actually, I've known why for decades now. But there is way, way, way more money in bonds than there will ever be in stock. And our stock's a good deal now. That's what people are always asking: is there some magical fund manager who's going to find something out that the rest of us don't know and make a ton of money? Probably not. In fact, the very best known strategies, there are multiple variations of that are available, and using them, finding them is one thing. Using them is another. The funds that have the good track records have better than 5% average annual returns over the past 5-10 years. They're really volatile. It's not. They're not doing that smoothly. It's not like a CD. That's one of the big mistakes I see people making that don't do this for a living. Is that they come into it with an idea, or they forget when their funds were down. They only look at them or study them when they're up a lot, and which is actually not a bad strategy when you're young and chibbity, because you will see over time stocks have a tendency to do better than most other investment vehicles that you can invest in, especially in your 401k plan. And what they don't understand is that, first of all, you're adding to that all the time. And the additions that you make when the market is down are extremely helpful. I'll give you a little example. Let's say you've got share price of a fund that's in your 401k at $10. Market comes on, it goes through a period like the last big drop that came along, knocked down 20%. So each and every dollar that you're taking out of your check, putting into that retirement account, is buying stocks when they're 20% cheaper. And because of that little effect over time, it's going to be incredibly difficult to maintain the returns that you get in your 401k plan when you retire. Why? Because you're not adding to it every year. And when you were younger, when you're adding to it when you've only got $50,000, it doesn't do nearly as much for somebody who's got $1 million, because you're capped at the amount of money that you can put into it. And so, does that make sense? It's one of the things that one of the reasons if you have any questions on this stuff, feel free to call. Just give me a call. There's no charge for that. If you think you should be increasing the amount that you're putting into your 401k plan versus your regular savings. By the way, there's no right answer for that, but there's a right answer for you, because your situation is going to be different than other people who might be considering doing the same thing. And that's really what a financial advisor is for. Basically, just bouncing ideas off. What do you think of this? Because I promise you, after I was 10 times the advisor when I had 5 full years of experience than I was when I was brand new. And when I had 20 years of experience, I was a much better advisor at that point in time than I was when I only had 5 years. So now that I've got over 30 years, I'm not going to tell you how many. I'm just kidding. It's the about to be embarrassed about it part. It's been excellent. I'm still learning. People are still coming out with new products, and that's fascinating. Sometimes they use the older products, combine them in a unique way to come out with a new product. But if you don't want to get bored, this is a pretty good career choice. Although I'm not sure you'll need people like me 10 years from now when artificial intelligence comes in. And I will be super, I watch the unfolding of how the stock market develops, how my industry develops pretty close. I'm going to be really interested over the next 10 to 15 years, because they say they have artificial intelligence, it's going to do a better job. I've seen a few so far, and they're not improving on anything yet. I don't doubt that they can at all. I just still doubt the individual's ability to let them do what they need to do on their own. And maybe they'll come up with I've seen that, which I also think is interesting. But I'll come back to this topic next week because it really doesn't have a whole lot to do with investing. Like if you're investing right now, let's say you're coming up on retirement, you're going to be retiring 5 years from now, 10 years, maybe 15 years, and you'd like to have a better idea of where you're going to be, you're still going to have to estimate to do all that. You can't guarantee those things. You could guarantee it, but you could just put it all in treasury. You say, okay, I'm getting 4%, but those treasury rates are going to change. Over time, they're going to change. So you come up with an estimate using the current information that we have. Just understand that it can and probably will change. But the stock market was a lot like the weather. I mean, the only reason that we are as accurate as we are at predicting weather is because we have satellites. And during my lifetime, before they had all these satellites, the weather report, they were wrong like 7 out of 10 times. That was pretty wild. And so you listen to the weather report, but it wasn't as helpful as it is now. But now you can actually, with all the satellites, you can see everything happening. A large part of that's happening in the financial market. The companies that are building the models that have been proven to work over time are doing very well, and they're getting bigger. And there are a lot of them. And because there are thousands of stocks and millions of different types of bonds out there, the bond market's a lot bigger than the stock market is. There's so many combinations. That's what's frustrating for individual investors. Where do I go? Where do I fit in? And that's where somebody that got some experience, that understands how a lot of those things work. What are the areas where you might get concerned, when the market's going down? What can you look to help yourself get through those periods where the market is down, leg up? And that's one thing that if you study a lot, what you'll begin to find, and your advisor should be able to help you through this kind of stuff, is to point out, hey, look, this is what happened during this time period, and this was the result. This is one of the reasons I'm not upset about the current stock market, despite what's going on economically and politically. Economics have not been affected nearly as much, I think, as people thought they would. I would have thought that all the negative news that's been coming out would have had a much greater negative impact on the market than it's been having, and that's what I get for thinking. And that's my point. After 30 years, and it's no big deal, I've also learned to tune out my biases or trying to figure out exactly. It's kind of like horseshoes, close count. You do not have to get a ringer to score. You just need to be somewhere in the neighborhood. And that's a lot easier to do, by the way, than trying to be exact. So people could just get that through their processes, their thinking. They would be much, much, much better investors. But that takes a lot of confidence. The confidence comes from working with it, from familiarizing yourself with all this stuff, or having it. That's why an advisor has a job. That's why you could easily do computer programs that will do everything a financial advisor does, but you would still have to sit there, and they would have to listen to the stories or read, and they would have to study. Then they'd have to take some tests to make sure that it understood, and then they need to practice it for a long time become completely comfortable with it. And by the way, I have clients that have done that, and it's amazing. And I keep wondering, why are you a client again? Because you can do all of this stuff yourself, and the reality is, I'm a backup. I don't have all their money. I'm there. They want to run something past me, they can. And they know I'm going to give them an honest opinion because I don't work on commission on investment accounts. I get a commission on annuities, but that's a different story. That's an insurance product, and that's a long-term buy it, set it, forget it type of thing. There's not a ton of ongoing maintenance with it compared to stock accounts. But the stock accounts are, we're going to run models. We'll use either ETFs. I have some individual stock models that I've just started bringing back. I used to do nothing but stocks, but thinking that probably what people liked. And then ETFs came out and copied everything I was doing. And then came out with several variations on each theme. So it's interesting. Like I said, nothing is as constant as change. And some things are changing faster than others, but I've only got about 45 seconds here, so I guess I better sign off and just let you know if you heard about something you'd like more information on. Feel free to reach out to me. My website's bullingtoncapital.com. My email address is bill@bullingtoncapital.com. My phone number 330-664-0700. And have a good week, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.